Hey everybody, this is Brett with Monarch Capital on February 3rd, 2014 with a quick rate update. Some of you guys have seen this chart before, some of you haven't. It traces bond activity and specifically the bonds which underlie mortgages and mortgage rates. And so it's a bit counterintuitive, but basically every vertical line is a day, and as these lines go up, rates go down. And when the lines are going down, rates are going up. So it kind of goes the opposite of how it looks. But the bottom line is really since the beginning of the year, rates have been going down, down, down. And so we're at really some of the best levels that we've been at in the past 3 months. If we look at the past year or so here, you can see we're definitely not near where we were at the historic lows here. But we've come off some of the weakness that we had sort of late in the fall, early September, and so forth. So this has been caused by the fact that basically people are concerned that the economy really isn't as strong as it might appear. And as the government talks about backing off of the stimulus and quantitative easing, a lot of people are concerned that we're going to see more contraction in the economy. There's also concerns about Asia. Greece is reemerging as a concern and so forth. So the bottom line is, for the moment, rates have been getting better. I've done a separate blog on this, but I really like to look at this CNN Fear and Greed Index. And basically what it does is it sort of traces the sentiment of investors based on these factors: stock price, strength, breadth, junk bond demand, momentum, and so forth. And what's really interesting, if you look at the history of this fear and greed chart, you can see how it goes back and forth, right? So people get super greedy, then they get fearful, greedy, fearful, greedy, fearful, and it just bounces up and down, up and down. I knew that as we were approaching up here that we were getting a little bit too high towards the greed, and it was time to bounce back down. Well, here we are. Now you can see every time that we hit this bottom, we tend to come up. However, there have been some times where it kind of jags down a bit. So it's hard to know exactly where we're headed, except to say that we know over time it'll probably snap back to greed, which means that rates will start to come back up again. So the bottom line is it's a great time to act. If you've held off on refinancing, you probably want to get off the fence. And if you're looking to purchase a home, the purchasing power of your dollar is going to go farther now. So at any rate, I hope this helps. If you have questions about your specific scenario, let us know. Have a great day. Take care.